Good evening, everyone. Thank you for taking time out to join us for today's insightful session on pre-budget expectation and insights, a topic that is extremely relevant as we approach one of the most closely watched economic events of the year. The Union Budget is not just about numbers; it sets the tone for the economy, influence market sentiments, and impacts every stakeholder, from investors and business to salaried individuals and taxpayers. As expectations build across sectors, today's discussion aims to decode what the upcoming budget could hold and how one should prepare for it. We are delighted to have you all with us today, and we hope this session helps you gain clarity, perspective, and actionable insights. Before we begin, just a quick note for our audience. Please feel free to drop your questions in the Q&A or the chat section, and we will be taking up audience questions towards the end of the session. Now, without taking much more time, let's move on to the most important part of today's session. It gives me great pleasure to introduce our speaker for today, Mr. Asutosh Mishra, Head Institutional Equity Research, Ashika Group. As someone who closely tracks macroeconomic trends, policy developments, and market movements, and bring a very practical perspective to budget analysis. Let's welcome our speaker and deep dive into pre-budget expectation and insights. Over to you, sir. Now the platform is all yours.
Thank you, Ari. Thank you for inviting me and hosting this call out there. And welcome everyone. Good evening. So I would like to first set the context. I would know that each year we are going to see the budget comes, but context is very important in which the budget is presented, and that's really drive the budget part of it. So let's see what is happening around at this point of time. So we are in the in the midst of big geopolitical tension which is going around the world. Although war is going from the last 3 4 years, but the level of uh, tension which is there in the world at this point of time is extreme, and that is being reflected by what is happening in the gold and silver prices, which reflect of the uncertainty in the global market. Whenever the uncertainty goes up very sharp, we find that gold and silver prices start behaving irrationally, which is happening at this point of time. So first context is that there is a lot of uncertainty in the global market, and government has to keep that in mind before presenting the budget. Second context is very important, that we are entering into a trade deal with many country and or no economic zone. At the same time, we are not able to do deal with the USA. So we have entered into a deal with European Union just on 27th of the January. We have entered the deal with New Zealand. We have entered into deal with Norway, Switzerland, no another group of European country. Few months back, we have able to deal no uh, struck a deal with UK earlier mid of the last year. So we have no got some success on the deal front. So a lot of FTA is being signed, and in a subsequent time, we need to sew it up with a no deliver some credible result on that part. So currently these FTA is being signed, but at the same time there must be some policy support. There must be something from the government side, so that things can be moved forward, so that our business take it forward from here on. So that is another context. Third context is surely that US we are not able to enter into the trade agreement with the US, which is one of the largest partner. So how that is happening. Fourth context is what is happening on a rupee front, and especially currency front, and its impact on a overall balance of payment and the way things are shaping it up. Fifth and very important context is from the market perspective. If I try to look at, then no, what will be the taxation in this current scenario, where we are discussing about no the fiscal deficit of US, European country, how our government is going to be playing on these part, whether they will remain on the path of fiscal consolidation, or whether they will no take this exceptional situation to do something new. So, keeping all these context, I think this is a very unique year for a budget part of it. Market expectation is very, very low at this. Market is not expecting anything great. We all know that no, our market is hitting no, a bit of at this point of time, and people are not having big hopes. So, from that context, if you look, if there is any positive surprise, we will be no things can change out there. And keeping that in mind, which I think is that if I go back and see 12 year of this government now, 11 year they are going to complete, so 12 year they will enter in the next few months. Probably this is a period where post COVID, when government reset the whole fiscal math. They clean up all the off balance sheet borrowings and other, and reset the budget math to 9.5% of the fiscal deficit from 3.5% that prior COVID period, and allowed the government to spend huge money on infrastructure. So roughly 3 lakh crore from capex to it went to 12 lakh crore in the last budget out there. So that change happened because government changed the physical math at that point of time, took the opportunity of the COVID and literally did a superb job at that point of time. I clearly see this. The context is very important here, that the way things are shaping up globally at this point of time, there can be some positive element coming in this budget too. With this whole this because of the context, I think there can be some positive element on that part of it. So this is what where I clearly think on of the budget part. Coming first on a budget math. So we have seen the last from the last budget till this budget. Last budget we have seen the huge tax incentive was given, and government pushed the consumption, especially when the 12 lakh rupees uh, was exemption was raised to 12 lakh rupees, and then further in the mid of the year we got a GST cut. So if when we look from the consumption point of view, we have seen that last 1 year government has done sufficient, both on the direct tax and indirect taxes. So I don't expect any major changes on the direct and indirect taxes, which will be pushing for a consumption part of it. Consumption side, government has done already. We know that the central government pay settlement will take place in the next financial year. So for that, pressure need to be done. So that will be another consumption push where we need to see what government is, whether government announce something on that part of it or not. So so on consumption front, I don't see any major announcement to come in. Where I see the things can come in, when we see the context of India signing FTA with so many countries. So what incentive you are going to give to entrepreneurs so that they take the benefit of these FTAs? We all know that even not we have signed this much of FTA. There are many other economy like Canada, Brazil, who's no head of the government is visiting in the next 2 months to India. So we probably may enter into more free trade agreement. But what type of conducive environment government can create in this budget further so that our entrepreneur can take benefit of that? From that context, I clearly see that there will be there can be some announcement, especially to further push manufacturing, and to extend some of the PLI which is being provided in in the manufacturing space. So that is a one very important part that no uh, so that our entrepreneur also gets some incentive from the government front so that they invest sufficient amount or in a sufficient manner so that they are able to participate with no rigorous vigor and really win some of these initiatives which has been taken off. There is one. Another, we clearly see no a lot of discussion at a global level is happening on a capital gain tax. We should not no, given that last year only government increased no capital gain tax from 10% to 12.5%. No, but this is a no opportunity for government to relook into some of the part of it, because if you look at among the emerging and global economy, uh, capital is very important when we are signing these type of FTA, so that business can take benefit of this. We need a long term capital to come in. And if you look at what is context at this point of time, the rupee is hitting low of no all time low of 92 rupees at this point of time. And no there is a somewhat of capital outflow from the listed equity part of it, although on a bond side we are still seeing a very huge inflow coming in. So there need to be some incentive to this segment part of it. So we may see some corrective actions to be taken at that part of it, where government may change rules toward the tax residency. It's basically like, suppose as an Indian, when we invest through Gift City in a US market, we don't pay any capital tax. But when US investor comes here and invest here, they need to pay the capital tax out there. So some type of tweaking we may see. There is even adverse judgment on one of the investment by a global PE fund from Supreme Court. So that ratifications or improvement in that part is also required, because some of these decisions have a long-term negative impact. We have seen what happened to the Vodafone idea, no dispute because of the tax, no an adverse judgment. No, it literally the whole will get need to be reinvented in this process out there. So I clearly see that some announcement we may see coming up on a rationalization of some of these taxation, especially from the attracting foreign capital, because as a country we are now generating a good amount of capital, but still we are capital starved. We need the type of FTA which we are signing at this point of time. To really take benefit of these FTA, we need a capital, and that capital need to be attracted at this point of time. So from that perspective, I see this is an opportunity for government. No, even if they to reverse, or if I don't say reverse, but to take some actions, so that no, investing in India from overseas perspective become a relatively more attractive part of it. So that is a one part of it. So this is one. Coming to the physical math. So physical math, we clearly see physical deficit. Probably in this year, government may, instead of going for further physical consolidation, which they have announced in the last three budget, may halt out there. The reason is simple, that given the current context, they need a room, and they need the country need a little bit more handholding and support in this context. And even if if you globally, if you compare the physical math of India compared to the physical math of other G20 economy, we are doing fairly well, or if say among the large growing economy, we are doing quite well. Another important point in the GDP, in a budget, is a very important nominal growth. So like the GDP growth which we see in a headline numbers are a real GDP growth, means inflation adjusted. Whatever GDP comes, the inflation is get adjusted and then we deliver. But if you look, the budget math is depend upon the nominal GDP, and the nominal GDP growth has come down. If you look at India, it has come down from 14% from the early days of the Modi government to roughly now 8% out there. And the corporate profitability and everything is linked to the nominal GDP growth. So what initiatives they are going to take, so that this nominal GDP growth, which is gradually coming down in India, start slowly going up out there, because that's play a very important role. So how that they balance between these two parts is really very important things to watch out for in the budget. So that is that is one part. And second is, if I just look at capital allocation. So another discussion which is going on at this point of time is clearly how much money should be put into the capex. So whether private capex should be pushed, or public expenditure remain the key part of it. Between last year and previous year budget, uh, the capex was maintained in the same level, so that disappointed market, some section of the market, but government pushed the consumption at that point of time. So what will be the government push at this point of time on a capital allocation part of it? Second, within that part, how much is going to be on a defense part? Why? We have seen a small, we can't see the war, but small military actions in the last year. And post that, we have seen readiness on military actions has been increased substantially. The way whole global geopolitics is getting played, the military expenditure, not only in India, across the world, is going to increase. Like US president is clearly asking European Union to increase their defense expenditure from 2% of the GDP to roughly 5% of the GDP. In India also, we need to spend slightly increase our military expenditure. Like we are talking about acquiring some of the best quality aircraft. No, from and then the global tender is on at this point of time. So we need to look at how really no this balancing act is being done on no between capex on inter non-defense part and capex on defense is being managed, because defense is a very, very important fact in this geopolitical scenario. So for that context, if I come, some positive announcement or some higher allocations in the budget for the defense will be surely be there. And that's why the one sector which, from the market perspective, looks relatively better placed is a defense from that angle, and that's what market is also factoring in that part of it. Given these FTA which we have signed and the demonstration which our no defense product has no delivered in the month of the May in the small military operations, has clearly opened up the big domestic as well as global defense market for India. And that's why it's very important to see what government for no do further to accelerate that pace in this. So the defense capex will be a very important factor in my view to watch out in this budget. And then last is the market transmission set, like what they are on the new tax code. The new income tax act is getting implemented from the 1st of April. Whether the two tax system will continue, or no old tax system will go away. Some of these things will be very important from as an individual. What type of whether government will further sweeten some of the deal for an individual level or not. Although I don't have any expectation on that front, but still, we need to watch out on that part. That what government is going to do on that thing. So we really need to focus on that part. So um, that's why this budget, I don't expect any major populist pivot towards the retail and consumption, and more towards the capital expenditure or PLI schemes, where things will be much more deeper way to look at, or much better way to look at long term continuity of the thing. And another important will be no which like yesterday's economic survey also indicates that how really we balance between inflation, tax collection, and other parts. So if I look, no debate is going on in the at a global level, whether we should follow the fiscal deficit target through fiscal deficit as percentage of nominal GDP, or we try to debt to GDP part of it. So we probably may see some discussion on that part. It has own no positive and negative role. So the numbers will be look from that perspective. Even on number front, another important part is that the base year is going to change. Post next budget will come with a different base year. So the among the economists, it will be very critically judged on the base year factor also. So that will be very important to watch out that how the government put the budget math on the keeping in the mind the change in the budget in the base year which is going to take place out there. uh, so even uh, the like lower deficit may not be fully taken as a lower growth, but we need to balance in between that key, still private capex is not picking up in a similar way. So what government do on that part? So keeping that, the first sector which I clearly see is going to take place is defense. And in defense, no, we need to look at the both angle, not only from the domestic requirement of the defense product, which is very important, because if you look from the learning from the Israel war, Israel Gaza conflict and Russia Ukraine war, the supply chain resilient is a very important than what you buy out there. So from that perspective, domestic production of the defense equipment will be a very important part, and that's why I expect government to further push on that, and there where the defense stocks is expected to see a good momentum coming in from that part of it. Another thing which I clearly see, which we may see coming up is the manufacturing, because we are entering into the different so many FTA at this point of time, that government need to put the manufacturing on an accelerated path. Like, I just like to highlight one thing, that like aerospace industry. If you just see that this if I say the biggest game changing in a European Union India FTA can be the aerospace. The reason is that if I think one of the thing which India has put forward, that the realigning European Union uh, 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 the flying norms with DGCA, India's DGCA flying norms. So what DGCA will approve, it will be approved by the European Union. What European Union approve, it will be approved by GDCA. That happens, it is a moment where we may find that the Marathi movement for India coming in, where whole defense ecosystems can rebuild. The MRO of Rafale is coming India. We are seeing a lot of works on engine technology at this point of time coming in. So if further budgetary supports comes onto that part of it, that sector is expected to see a very different change. And if you look at air, especially on a airline industry, or not airline, but the whole military as well as civilian airline part of it. A lot of things has taken place in the last few months. Adani has entered into with the agreement with Bombardier. If you look, French Dassault is bringing their MRO in India. There's a talk in the market that India will give more order of the Rafales out there. Even on Indian technology, France is ready to set shops as well as transfer some of the technology on a Indian front to India. So keeping all this in mind, the aerospace industry, I am very optimistic, given if the way things are spending at this point of time, and the way things are getting structured at this point of time, probably with some budget push, we may see this industry with another space where we can really find some of the positive announcement can really come up on that front. Third is surely infrastructure, because whenever budget comes, what type of money government is going to spend on the infrastructure and power. So the infrastructure and power will be the focus. So there, solar is another important space where we may see some of the announcement or some of the support may be coming for the solar part of it. Some of the solar stock movement in the last few days also indicating that sorry, given the current situation in the global market, we may see government coming and supporting solar sector out there, and broader infrastructure too. Although on a road and in some part of the road and railway we have done, but I still find a lot more support, especially coming up for the especially in the railway, port, shipbuilding. Shipbuilding is another part, like, which is also defense as well as infrastructure part. If you look last 3 4 years, government of India has announced many major port extension, as well as clearly chief economic advisor to different government machineries has clearly indicating that India is focusing on bringing the whole ecosystem of the shipbuilding in the country. And from that perspective, I clearly find we may see some positive or structure no mention some positive announcement, and or further sweetening the deal in the area of shipbuilding, port, and other infrastructure part of it. So this is on the infrastructure, and power. Power is another very important space. We all know that in our life now we are using AI like anything. We are using AI in such a mass manner, AI is a power consume, use power consumes. AI require huge power, and across the world, if you look at power. consumption is increasing, and with the AI it will go multifold. And that's why I see it, is there any further support? Is there any further announcement, especially on a power front and especially on a green hydrogen to renewable part, which I earlier mentioned about? If you look last few month announcement, India has got some of the large FDI investment in a data center and GCC front from the US based company, despite whatever we are, despite whatever is happening in the India US front, especially on a trade front. Company like Meta to Google to Amazon, everyone is coming and investing into the data center in India. Why? If you look at a cost of power in India versus cost of power in the US, there's a huge difference in that part. So some development on that front is clearly can help further here. Government has also taken many initiatives and has also amended the Nuclear Power Act, the act related to the production of nuclear power a few months back. So now private entity can also enter into the nuclear power. So we may see some announcement or support from the government front, especially on the no increasing the nuclear power also, which is another very important from the power sustainability part is, because solar, if you look at, no, it's only daytime. We need less carbon producing, or say that carbon efficient power production, which can support day as well as night. From that perspective, we may see things may be coming up in the part of nuclear too. And also we can see that battery as a energy storage systems, some support may be announced on that part. Third is, and then third, no, if it's a next industry which I will like to focus, and things may come as mining and material. So metal, the only sector which is really doing great at this point of time is mining and metal. And we all know that metal stocks are like rocketing at this point of time, given what is happening in a global context. But the most important part in the metal is that about which in this whole discussion has gone little bit gone down, is a rare earth. So rare earth is very important thing, given where we are at this point of time. So last few years, government has literally worked and has become successful in bringing the semiconductor ecosystem to the India. And if you look between last budget to this budget, a lot of things happen on the global level where rare earth supply from the major supplier China has been restricted across the world. President Trump in the US is mentioning rare earth, I think 20 or 30 times in a week out there. So we may see some further support from a government front, especially in the mining and side, to further increase the mining of the rare earth, as well as some of the important material, no, like we can say aluminum to copper or coal, all other part of it. Name the actual materials which are very important from the this whole. If I look defense, aerospace, infrastructure, power, this space is very important. This does not come on the front, but it is very important and the backbone that we improve on that part of it. And when all these things will come together, we stitch together, then financial is another space which is in the market, I say my first love. So the financial is a space where we may see some positive announcement taking place in the uh, if all these things announcement comes in the right way, government borrowings is managed in the right way, liquidity is like, no, although liquidity is not a subject matter of a government, but if the subject matter of the government is on the how they manage the borrowings, if the borrowings is managed in the right way, and ample liquidity is being provided into the system, that is another space where we can clearly see some positive things taking place. And the last sector where I clearly see some positive announcement may come. And this is what I got triggered, especially from what is happening on an economic survey where they are talking about logistics and e-commerce. So we may see, when India is entering into the free trade agreements, India need to literally move into the next phase of logistic management. If you look at, we are way behind in logistic value chain, the way it operate in the China or another developed market. So it is an opportunity to take this space also to improve, because unless until you don't improve the logistics part of it, you are not able to deliver to many of these FTA part of it. So if things get produced, but if you are not able to deliver it at on time, even for production, you need a very efficient logistics. So the logistics, we may see some positive announcement coming up for the logistic part of it. Yeah, that's what I want to share. And any specific questions, I'm ready to take.
Thank you, sir, for insightful discussion, whatever you have said so far. Just to throw light, as you said, the manufacturing sector, defense sector, there are two sectors which you already thrown a light on that. But one of the participants is still asking, do you have any specific on the railway sector? There's something which you can have much more elaborate discussion on the railway sector, if any.
Yes. So railway, if you look at, in a railway, what had happened in the last 2 years, there was a little bit lag in a revenue growth of a railway company. It was predominantly uh, because of two things. One, that some of the safety concerns has come up in the railway part of it, and there where government you know decided that first they will address the safety concern, which is being addressed through the Kavach. So I expect Kavach rollout to increase further, and no, Kavach is a very very important theme from perspective. And second important thing which railway sector faced on a capex front was a no the wheel was not the railway wheel for a no repairing the bogies were not available in a sufficient manner. So that capacity is coming up in a big way in India, and lot of domestic production is going to take place from here on. Our analyst team has done a deep dive work. Kaushik has really done. Kaushik and Pankti and Julie has worked very deep on that part of it, and has clearly no what they have suggested to me is that uh, FY27 will be the big year for many of these companies. So some support, some arrangement, no, some big orders can come from on that front too. So yes, railway stocks has underperformed, but given the context, probably now safety is being addressed at this point of time, and it will further get addressed in FY27. So slowly we will start finding that the railway capex will start catching it up. So both railway capex companies as well as the company like some company like which implement the railway infrastructure, no, that those can also be get big benefit of that.
Thank you, sir. Moving to the next question, one of the participants still asking, is there any key macroeconomic factors the government is likely to focus on this year specifically? So apparently, as you already mentioned, the physical discipline and other kind of thing. So is there any specific thing which they should look forward when they are hearing the budget?
Physical deficit target is one of the most important. The most important number in the any budget is the physical deficit target out there. So the important factor which market need to look at, every one of us need to look at whether they will continue on a physical consolidation plan, or they pause given the current context is. So whether they will maintain at 4.3% or they want to change something on that front, because this math has a two element. One is deficit, another is growth in the nominal GDP. That's why I bring the nominal GDP number part of it. So our nominal GDP growth is lagging. So because of the lower inflation, so lower inflation has a one positive element to play, but there is a negative element of that is that absolute growth does not look good. So how that been balanced will be very important factor in the thing. If you look at economic survey is indicating 10, the government is targeting roughly 10% of around 10 to 11% of the nominal GDP growth. So what type of things they are doing to achieve, and especially from the context that no, we have already taken major tax revenue cut, or in the terms of the GST, as well as increasing the tax limit in the last in the last budget, and between the last budget to this budget.
Thank you, sir. Thanks for your answer. Just to follow on the same question, the one last thing which then I would like to know, what is that one key takeaway an investor should keep in mind while the budget is there? So there's something which, as an investor, from what are the things which I should look for both from a long term and a short term kind of investing? Is there something more to do the fundamental technical, or is it more from a macroeconomics perspective? What should I take in as a factor?
The most important factor will be the government. If one single factor, if you ask me, then it will be what type of OPEX government is spending, and where that OPEX is coming up. Because we are not expecting any major announcement on a consumption front in this part of it. So the OPEX become the CAPEX become CAPEX become the very important factor to look into, other than the physical deficit and other important factor which is there.
Great. Thank you, sir. Thanks to all the participants for joining in today. Just a small announcement. We also have a post-budget discussion, which we will be doing on Monday at the same time, 4 p.m. So we would love if everyone can join during Monday as well. Thanks a lot. Thank you, sir. Thanks for your time. Thanks, everyone.
Thank you.
Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.